Go. And we are live. Good morning and welcome to another episode of Money Matters, streaming live every single morning at 7 a.m. Eastern Standard Time, only on onedealaway.com. And today we have very, very important news, very important update, incredibly important, and may I say, juicy episode. I've heard somebody say that, and I was like, it's a juicy episode. Who doesn't like juicy? Come on, work with me here. So today we have a very, very important show. We're going to be overseeing the market. We haven't looked at the stock markets and kind of what's going on over there. We're going to be talking about what happened with some of the companies and what's going on. There's some additional delinquencies and problems and stuff that is happening that I think it's important to take a look at. And then we're going to spend a little bit of time discussing a very important article about the challenges with day trading and the fact that there are all these platforms that are selling you on the day trading, but the reality is that you are set up to lose from beginning. And this article and I will explain exactly how that is so that you can protect yourself. Now, there's nothing wrong with day trading if you want to do that. I personally am not a day trader. I don't trade when I put my money in. I'm more of an investor, long-term investor, and but I also don't judge people. I have traded in the past, and I understand the sort of the excitement behind it. But I want to make sure that you understand what it all may or may not mean, and what is the truth, and what is sort of this media selling component. I call it media marketing for Wall Street, that maybe you haven't heard before or don't understand. So, very important show, and all about how we can help you protect, preserve, and potentially even grow your money. Let's do this. And good morning. It is Wednesday. Can you believe it? It's already Wednesday. My gosh, time is flying. And it's July 15th of 2020, so happy tax day to you. Who would have ever thought that we would have said happy tax day on July 15th and not April 15th? But here we are. This year has been a very interesting one from beginning. It started off kind of cool. We were all very, very hopeful and excited. And then it just, whoom, it was like a tsunami wave. It came on, hit us all, probably equally. Okay, some people maybe more or less, but everybody around the world is experiencing and dealing with this whole COVID situation, trying to understand. And it's constantly evolving and changing. And then, you look over at some of the other news in India, and they're dealing with the heat wave and locust attacks. And then you come to United States, and we're dealing with the heat wave. And apparently there is a squirrel that has bubonic plague now. Then we are hearing from China that there's actually quite a few people that are sick with bubonic plague. And it's just one thing after another, floods and storms and all these different things. And then, of course, there's the trade wars and hot wars and all kinds of different things. And I think people are pretty much over and done with the year, but the year is not done and over with us. We still have solid 6 months. Okay, a little bit less than 6 months at this point. We're over the hump officially right now, but it's one of those things that I think people are just kind of ready for. Like, anything could happen this year. I mean, it's just crazy. Anything had happened this year. So today, I figure we can start with looking at the market, and then we can go in and dive in some of the conversations and topics. So let's get into it. It would help if I actually, if the screen changed for you, wouldn't it? So here we go. We have S&P 500, and I wanted to take a look at the 6 months, because when you look at just one day, oh yeah, it's up and it looks amazing. But I think zooming out gives you a little bit bigger picture to understand kind of like, where are we in the market? What is going on in the market? What can we expect? And you can kind of see that we've gone up, but you can see that it's very much tapering. Now, this is S&P 500. Let's go and switch into Dow Jones Industrial, and it looks actually worse than S&P 500. Now, of course, tech you could expect that, yes, we have broken that. There were the highs, there were the old highs in February, right? And we have broken those quite a bit ago and are doing much higher. So we'll see how that performs. And I will share with you in just a moment additional piece of kind of where all of the traders and big money managers are putting their money. And there was a new article that was saying like, ah, dang, they're actually upset because everybody else is putting money there. So it looks like there's only one game in town when it comes to traditional investing. And want to look at the gold. And here we go. Gold, you will see in 6 months, it has actually been going up. So I want to say this is the March when we saw the drop, right? So here's the February. No, where's the February? Okay. So February is somewhere around here. So it didn't do much of anything. We had a little bit of drop early March, went up, right around the time where everything was falling, fell back down, and it has been going up pretty nicely. I mean, we're still holding above $1,800, and I think that that's actually quite fantastic. Now, before we go on and sort of talk about what are the folks doing and kind of what's going on, I do want to welcome everybody who is watching this live on onedealaway.com. And as always, we are going to go into the chat session, Q&A session after the live show. If you're watching this on YouTube, hopefully you're enjoying it. Do me a favor and subscribe to the channel. Hit the like button if you don't mind. And of course, the bell button so you get notified every day that the show goes live, which is every day. So there we go. All right. We've done that part of it. Let's get into it. So here is what the currently most crowded trades are, and it's U.S. tech stocks. U.S. tech stocks is where all of the big money, as they call it, the smart money, was betting on. It is still betting on, and we are seeing that everybody else is kind of jumping into it. Then and this is the global fund managers, right? So these are the big boys and girls. Well, I don't know if they're big, but I'm saying they work in a big companies. Okay. So, but anyway, so that's kind of where they were. And you will see that there's a difference between June and July of 2020. And you will see that, in June they had other, which they said specified, but it's not listed here. You will see that they were much longer in cash. So they were holding on to much more cash in June than July. You can see that that has dropped, but you can also see that they have definitely increased gold. They're definitely super long on the tech, while they didn't do much of anything in June. And you will see also that they are long on the yield curve steepener. So there you go. That's kind of where they are. Now, if we switch over to the next slide, this is the sector sentiment. So you are basically, they're looking and saying, what's underweight, meaning when it's underweight, it might make sense maybe to go in, and what's overweight, that's like people are betting on it, but maybe it's too crowded of a space. And you can definitely see that tech, pharma, communication, and discretionary industrials and insurance are on the overweight side of things, with tech and pharma leading by far. And then on the underweight side, you have staples, materials, banks, energy, and utilities. And it kind of makes sense why some of the folks will not be going in. Like, for example, banks, financials. We talked about it. I was going to say earlier this week. My week seems to run, 40 days only or more. So, but no, we did talk about uh, that banks are, we're getting ready for the banks to go in and potentially lose quite a bit of money, and have lost quite a bit of money over the second quarter. And so they're likely not going to be a great investment right now, because there's a good probability that the share of the price of their share is going to drop. But again, it doesn't always mean that, because there have been times where fundamentally you look at some of that stuff and you're like, it's supposed to drop, but then people jump in and they buy it up and it still goes up, and you can't really explain it, but it happens. And we've seen that with Hertz, we've seen that with Delta Airlines, we've seen that with United, we've seen this with American, we've seen this with so many different stocks that just some make way less sense than others. And we'll be talking actually more about Delta Airlines and why folks that were retail investors may or may not have made a good decision or a bad one for that matter. And also why, the retail and day traders that don't know what they're doing are being taken advantage of. But before we go into this, I have realized yesterday after finishing the show that I did talk about that what is going on with the higher education, that I was going to cover what is happening with the higher education, but that I never covered it. So right now, I actually want to jump into the article that basically is talking about the higher education bust. And there is a school in Vermont. Vermont College is going on auction block with $3 million bid. And it's beautiful campus. I can't get rid of this stuff, so my apologies for that. But it's a beautiful 155-acre campus located in historic downtown of Pulteney, and previously listed for $23 million. And you can see its entire campus, and it's a $3 million bid. I mean, that's a 90% slash and cut. And this was listed maybe in March. Or April, because I remember looking at it. I did take a look at it when it was listed at 23 million. I mean, it comes with all the buildings and gyms and I mean everything and anything, classrooms, the whole 9 yard, 22 building in total. And at that point, it was about 23 million or so. It looks like it dropped down to 3 million. So that's over 90% reduction. Now, why did it go down? Well, the school had to close, and here, we're seeing all of the challenges that are happening. In my prediction, probably since the early to mid 2000s, so we're looking at almost 20 years, 15 to 20 years. I've been saying that right now in the United States, we roughly have about plus minus 4,000 higher education institutions throughout the United States. That's private, public, 2 year, 4 year, specialty, all of that stuff. And my expectation, even back then, is that we were looking at that halving. Yeah, just like the Bitcoin halving. But since the pandemic and all of this stuff, I would not be surprised if over the upcoming years, now whether that is 2 years, 5 years, 10 years, I don't know that timeline, but it wouldn't surprise me if over the upcoming years, so relatively speaking short term, I'm thinking 2020s, so this decade, I do expect that there is going to be a massive amount of higher education institutions closing permanently. And only the few, the strong, the proud, whatever, the ones that have a good cash flow or good name with the good cash flow are going to be surviving, or the public institutions that are heavily funded by the government, if the governments can continue to do what they're doing right now. And with all of that, I really do believe that we'll go from over 4,000 institutions to maybe like 500 institutions, if that. And the reason for that is obviously there's a few different problems within higher ed. Part of the challenge with the higher ed is that there's a lot of individuals, younger individuals, that are looking at the cost and value of higher education, and they just don't see it. It just doesn't compare, and they don't understand why you would have to pay, anywhere between 120 to $500,000 to get education to land a job that might pay you 35 to $50,000 a year. The math just doesn't make sense. Now with COVID, when you can't even get a job, that education is brought further into the question. And so I think that there's a lot of people that are asking questions and wondering, how does all of this stuff work? The colleges and universities are expensive, for many different reasons. But a big part of the reason is that, when you think of a college campus, people think of education, but behind that education, there are people, and there's all of that land and all of those buildings and all of the upgrades that have to happen continuously and constantly. So there's this large chunk called campus and everything that is associated with it that is the expensive, incredibly expensive component of running a college university. Then, of course, you have employees. And when we're talking about many traditional universities and colleges that have tenured professors that typically get paid the most but work the least, and they're employed and hired for life, then you can see kind of how some of these things can really play out and how problematic this can be. But that's kind of where things are, and universities are not the only place that we are seeing problems and challenges, right? We've seen it within many other industries and sectors in the economy. We've been talking extensively and we'll continue to talk extensively about real estate on this channel. We've been talking about businesses and how many of them are actually filing for bankruptcy. So retail was hit first. Then we're going to see, many other businesses, many of which are, never going to open again. And talking about businesses and problems and challenges, I did promise to you that we're going to look at the airlines, specifically looking at Delta Airline. And right now is when I want to take you into that specific article. And here we go. Let's go and talk about this. So, we're talking specifically about Delta Airlines, and Delta has confirmed today, well, yesterday to be exact, why Warren Buffett dumped his huge stake. In the quarter just ended on June 30th, Delta booked a pre-tax loss of $7.1 billion dollars and an after-tax net loss of $5.72 billion dollars. This translates into a $9 loss a share. These losses include 2.1 billion in write-downs of its stake in Airlines and Aeromexico, both of which filed for bankruptcy in the U.S. recently, and Virgin Atlantic Airways, which may go into administration in the U.K. I don't know what administration in the U.K. means, and I don't want to make up. I'm guessing it's some sort of bankruptcy, forbearance, something like that. So if you are aware of what it is, let me know in the chat. Let me know in the comments on YouTube. I really do want to learn. Obviously, I can, excuse me, look it up online, and I will. But I'm also very curious, because sometimes, yeah, who knows what you're going to find. All I know is I might find the administration of ECB, and I'm like, that's not what I'm looking for. So here are the revenues and what's going on. Passenger revenues down by 94% year over year. Highly profitable business cabin other premium sale down 95%. Domestic flights are down 93 for the Atlantic, 97 Latin America, 98 in Pacific region, and 95 domestic flights overall 93 down, Atlantic 97 down, Latin America 98% down, Pacific 95% down. Cargo is down 42%. Other revenues like loyalties, refinery, and that stuff down 31%. Total revenue down 88%. This is huge. This is absolutely huge for them. And then, of course, I don't know if you have seen this, but the article talks about this particular thing, and I've seen it actually happen. So, I do have, because of flying and traveling so much, you get all of these. What are they called? Like the loyalty numbers or whatever. They have all these funny names for it and stuff. And so, now I have been getting emails from United and American and Turkish Airlines and I think Norwegian and, every airline I have ever flown with has been emailing me. And it's so funny. Delta is doing the same thing. And they're saying, we're getting all of these like Delta CEO Ed Bastian titling like your update from Ed, and it's all about like safety and security, and we're requiring masks, and this is how we clean it. And hey, it's awesome if you want to fly. And I'm thinking to myself, yeah, I would love to, but where can I fly? I can't fly anywhere, and I don't want to just fly for the sake of flying. If I want to travel, I want to travel for business, which none of us are traveling for business anymore. We do everything just like this, right? Virtually live, as I like to call it. And, and places that I want to travel, well, they don't want us. We are banned, officially banned. We are the black sheep of the family, as they call it. And I don't know, can you still say black sheep? And I don't mean to be offensive. Things get lost in translation in my little world. and I don't always understand whether that is okay to say or not. So educate me, please. Let me know. Purpose, of course, is to get people back on a plane. The Europe fall flights are canceled, and now international pariahs under broad entry bans. He's talking about how his wife is sitting on a ticket to Japan on United, which she can't, get a refund. She can't travel to it, but he's allowed to reschedule flight into an unknown future day without change fees. And so that's where a large problem comes in. Now, when this is kind of where this big problem is that a lot of people don't want to travel, can't travel, and a lot of people that are sitting on tickets can't get refunds, which I guess we all understand. The cool piece is that they're letting you sort of extend it indefinitely, but that at some point is going to expire as well. And maybe the hope is that people are going to forget that they have those flight tickets, and the company books the revenue, but it doesn't book of anything else. And we'll see how it plays out in the future, where hundreds of people, thousands of people, tens of thousands of people, maybe hundreds of thousands of people all decide that they're going to fly a couple years into the future, right? And what is that all going to look like? Now, one of the things that I have seen on Twitter recently is that there were some photos and images and videos of domestic flights in United States. I mean, it's like packed, and you're like back to back with each other of like trying to board the plane and stuff, because what is happening is that they are cutting down the number of flights that they have. So let's continue with the story, because it's part of the story. Now, Delta is responding radically by slashing the expenses and capacity, trying to stay alive. Delta received 5.4 billion in bailout funds from the government, extended maturities of 1.3 billion of loans to 2022. They sold new bonds and took new loans, and they have raised nearly $15 billion over the past 4 months. At the end of the second quarter, it had $15.7 billion in cash and short term investments, enough cash to last half a year from the current burn date. Of course, they're likely going to be able to raise more money, be able to increase the cash as well, probably get more additional funds from the government, and maybe extend this in for a year or so. But then what? Then we'll see kind of what's going on and what's happening. Now, I do want to take a look very briefly before we go into the TSA component. I want to take a look at briefly of the Delta Airlines stock, and you can see in 6 months it has actually, where is the March? So this is the March low. It has kind of gone up. It has kind of does these like little bump things, but overall trend, as you can see, is very much down. And yet, what are the retail investors doing on Robinhood? Well, you can see that, Delta Airlines is number 5 as far as the most popular stock to invest in. They are buying into this component. They are buying into this stuff without understanding what's underneath the hood, what's behind the curtain, what is hidden in the fog. The business of flying collapsed in 2 weeks by 95%. TSA checkpoint screenings, which track down how many people enter into the secure zone at airports, remained down 72% from the same weekday last year. You can see that it's been dropping. It's, sort of non existent whatsoever. The sales across all airlines and all sales methods started to drop again. Delta did say that it would cut the number of flights it had scheduled for August. Bastian, who is the CEO of Delta, said it'll be more than 2 years before we see a sustainable recovery. And meanwhile, things are going to get worse, continue to get worse. Delta's goal now is to simply stick around in much smaller form in order to still be there and be able to succeed when demand returns. That came directly from the CEO. Delta is shrinking into smaller, more efficient airline. They're shedding older planes, which means they're shedding people. Now, they did get backing from the government. They did get financial backing from the government, but it came with a stipulation. A stipulation basically said you can't lay anybody off involuntarily until October 1. And so now Delta is reaching out, offering incentives for early retirements and, asking for sort of a voluntary separation of people, right? And then once the October 1, they will likely start going into involuntary layoffs and furloughs. In the United, we have actually received notice is that they already have, because they have to give, when there's a massive layoffs, they have to give 60-day notice before they start those. And so United has already stated that they will be laying people off as of October 1. And they are basically saying after October 1, massive layoffs coming for United. So every company is doing that, and they are trying to protect themselves and really do whatever they can to survive, only to stay relevant, right? To remain relevant. So they're cutting left, right, and sideways. And I think that that's a very important thing to do. And while I understand that, it does hurt the people, from the company perspective, you keep everybody alive for 3 months and then everybody goes off. Or, you eliminate some but keep the company alive. So it's an ugly, ugly, ugly situation that, you can argue both sides of the spectrum. But when it comes to individuals leading the companies and looking at it, they have to look at it, what is the best for the company, not individual employee, as sucky as that is. And again, I don't even know. Can you say sucky these days? Let me know in the chat or the comments, and let me know what you think. Do you hold Delta? Are you bullish on Delta? Because personally, I don't know. I don't think I am on airlines. I don't think I am on any stonk whatsoever at all, because I think all of them are going to suffer a big deal. And now we've talked about what is going on with Delta. We've discussed that many of the retail investors are going on to these platforms that are free to trade and turning into day traders, thinking and hoping that the only way that they can win. And I saw this article and I thought it was really, really important. And it's basically talking about the day trading stock platforms are stealing from the poor and giving to the rich, causing depression and suicides. And so let's talk about it. Let's really discuss it, because it is very, very important. And I am incredibly passionate about this whole spectrum of what's happening and what's going on. And so I think it's important for us to talk about this stuff. So thousands of young, inexperienced people have become day traders in stocks during the recent pandemic, thinking they'll quickly make fortunes. They won't, and they're getting duped, manipulated, and exploited. Typical market pricing mechanism determined by the value of the business, cash flow, profitability are always critical methods and metrics. However, that is not happening right now. Day trading firms that charge no commission tell novices it's different this time. Now, I want to pause over here and say, how many of you have already heard it every single time? But it's different this time, and it's never different. That's the interesting piece about it. It's never really different. There might be slight sort of shift to it, slight curveball, slight pitch to it, slight, angle to it, but it's never different. It's always the same, and it always ends badly. And things like this that we're seeing right now typically end badly. And I have been saying that this is just a slow bump thing, and we're going right back down. I said it in March. I said it in April. I'm saying it now in May, June, and July. And again, my crystal ball broke years ago. None of this stuff is financial advice, but it is what I am using my education and what I know about things and looking at the stuff to say it just doesn't look good, y'all. Many statements in the websites of the significant day trading firms, right? Robinhood being one of them. Many statements in their learning centers ranged from stretching the truth and lying by omission to outright material misrepresentation. Now, since the crisis and many crises, all media outlets and politicians are fixated on the stock market. The stock market is when fortunes are made and made quickly. and then they're using all of the false narratives, right? Where we talked about it here on the show. You'll see it, and you were like, the stocks are going up because millions of jobs created. That's your opinion, and it has no merit as to why. But they have to give it some sort of thought about it. Or the stock stumbled because people are worried about COVID. The riots are causing the stock price to go down. Then the next day, the stock prices go up, and they're like, the riots are causing it to go up. And you're like, wait a minute, 2 days ago you said that it's causing it to go down. Now it's all of a sudden causing it to go up. What I'm saying is they are literally making things up as they go. Whatever stocks do, the media feel it necessary to give you their opinion presented as news on why markets moved. And here is the thing. Sometimes they're right, sometimes they're wrong. Oftentimes they have no clue why it moved. I mean, they are taking a wild, wild, wild guess as to why market moved. And if you just watch the news and you watch that, you were like, but of course that's why it moved, because they said that on CNN or CBN, CNBC or Fox or whomever you are watching. But no, that's just they're guessing. They're guessing. And you know what? The mass media has to push this darn thing because that's where they're getting money from. It is a huge collusion, in my humble opinion. All right. So let's continue reading. Your main risk management goal needs to be the return of capital before return on capital, right? So let's pause here for a moment so that make sure, because I don't know who is watching this, how much experience you do or don't have when it comes to investing, trading, and understanding some of these terms. So you want to focus of getting your money back first and foremost, right? Then, only then, do you focus on how much money are you going to get return on that money. Because if you're only looking at like, ooh, I can make 1 million if I put in $10,000 now, maybe, but you might not get that $10,000 back. And then what, right? Can you afford to lose all of $10,000? For a vast majority of people, the answer is going to be no. And so when we talk about the risk management and sort of the investing component, even the trading component, you got to think of that stuff. Am I going to get what I put in back? If the answer is no, can I live with it, right? If the answer is yes, cool. Then the second question comes in, and that question is, okay, well, how much am I going to get return on that investment after I get my investment back? Okay? Never take huge risks, and if your position goes bad, cut your losses early and sell. Do not dither and hope. Sell. Hope is not a viable trading strategy. I am telling you, it's like this guy has taken all of my courses, because I always say, every single time, hope and pray are not a strategy. They do not work. It's, yes, we all hope and pray. I hope and pray as well. I hope that the things will go away, that COVID will sort of disappear, but that's not reality. Every day I wake up and it's still back. And so I got to deal with the reality. So when things don't go your way, you sell. You don't sit and hold, but people do. I also will add to the whole thing. When it goes parabolic up, you don't buy. Because if you understand that everything that goes straight up has to come back down, you understand that this is the part where people end up going in, and that's when they lose. Most retail investors buy at the top, sell at the bottom. That is how people lose money in the markets and investing. Smart and intelligent investors buy at the bottom, sell at the top. But the key component then is, you're like, yeah, logically that makes sense. But when you're in the market, right, when you're in this crazy up and down world, you don't know where you are. You don't know if it's bottom. You don't know if it's top. You don't know if it's middle. You don't know where exactly it's going to go, right? So that's number one. You don't get to see this big picture. You only get to see a small picture to begin with. So that's key component. The second one is mental and emotional games that we play with ourselves. And I will tell you, I play those myself, all the time. All the time when you jump in and it's going your way and you get all excited and you're like, yeah, look at me, I'm a genius, I did this. And it keeps on going up. And smart thing to do, right, intelligent thing to do. The head is saying, okay, you made a nice profit, sell and get out, right? Cash out some of the profit, protect yourself from it, right? I'm talking trading here, okay? But you can't, right? Because you were like, oh, but if I sell and it still goes up, then I'm going to make a little bit more. And then, right, you hold on. And then it turns on you, right? And it starts going down. And you're like, oh, man. Okay, well, it just dipped a little bit. I'm going to hold on because, it's going to come back up. And then it dips a little bit more. And you're like, all right, it'll come back. And dips a little bit more. And you're like, no, 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 it's going to come back. And dips a little bit more. And you're like, well, now I'm negative. It doesn't make sense to sell. And then it keeps on dipping and going down, 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 down. And then at some point, you were like, holy mother, I lost 50% of this thing. I got to sell. But the problem is that it hits the bottom then. You then did the panic sell. It hits the bottom then. It starts to go back up. And then you look and you're like, dang it, if I just held. This is the part of that emotional mental training that you also have to undergo. So it's not just logic, because logic plays a very important concept within this, but can you disconnect your emotions from what you need to happen? And that's the sort of key thing within the trading. It really is an art and a science. Science comes in for this very logic understanding of the fundamental and technical components of it, being able to analyze, being able to understand when to get in, when to get out, and then sticking with it is really an art. It really is an art because you got to be able to control your emotions. All right, so let's continue talking about it. And we talked about it here about the young man who, committed suicide, a 20-year-old college kid. Committed suicide, after realizing he lost nearly $750,000 day trading. And the problem is that he was allowed to do that on platform, and that should have been illegal. That shouldn't have been allowed. But the brokerage firms, as long as you're over 18 and you can legally register, or 19, depending on the country and the regulations and stuff, you can jump in and they open everything to you. Whatever you want, go for it, go bananas. And they shouldn't. They should not be doing that stuff. And so, what the gentleman in the article is talking is that, options are inappropriate investment for the college students. He should have never been allowed to trade derivatives. And I would say that most people should not be trading derivatives. Trading is not a video game. It is not easy, and no one makes money all the time when trading. And I will tell you, video games are not easy as well, right? It takes time for you to kind of learn about it and how to work it. You people make money and lose money. People typically lose way more than they make trading, day trading in the stocks, but nobody talks about it. Mistakes are made, and these are very expensive on the job training mistakes. Now, um, getting into the day trading can be very, very profitable, and I agree with it. But what he's saying and what I'm saying as well is that getting it right takes discipline, a lot of hard works, hours of your own extensive independent analysis, and really making a decision for yourself. And even he says here, and I agree with it, many of the analysts are wrong. When they're saying stuff, they are wrong. They're not really correct. And even if might make sense for them, it might not make sense for you. So this is why you have to educate yourself first before you do anything else. Education, education, education. And you're going to say, well, Nev, you're peddling education because you have an education company. Yes, I'm peddling education. And yes, I have education company because I believe in education. Because without it, you're going to go in, you're going to buy stuff thinking that you are a genius when you're making money. When things turn, you're not going to understand it. And you're going to be like one of these Robin Hood people buying into something that is broke, buying something that is never, ever going to pay them back. Okay. And they might get lucky in a short term and make some money on the trading and stuff. But like I said, many people kind of hold it. If we look at the Hertz, for example, I mean, yeah, it was, it went crazy ballistic, but then it kind of came back down. And I haven't looked at it recently, but it's one of those things that people that bought it at $5 and now it's at like $1 or whatever. I don't know what it is. I haven't looked at it, like I said. They're holding on. They're down quite a bit of money. And many of them are going to be hoping that it goes back up above 5. We talked about the whole, like, people are, on TikTok are saying like, "Ooh, let's get into the doggy coin or Dodge coin or whatever." We talked about it in a previous episode, whatever. And they're jumping in, wanting to push it up and stuff, and they're trading. They're trading without understanding. It is not that simple. It really is not that simple, and especially if it comes to making money within it. Okay, every financial firm's objective is to make money. All of the firms make money every time you trade. And yes, I agree with it. And we're every company that says it's free trading, it's really not. The firms claiming charge no fees because those firms are selling your orders to high frequency trading firms for which they are paid handsomely. And then the high frequency trading firms basically front run your trades. They buy and sell before your order is filled. They make a lot of money. You get it, and then the moment you buy, even if it's going up, you're still down somewhat because they actually would buy you above what the price is showing in order to fulfill it. And it all happens behind the scenes in the algorithms, and you don't even see it or understand it. Loss of your money can cause depression and panic and unexpected students who quickly lose a lot of money and confidence. And headlines, go something like this: trader turns $30,000 into $1 million in a few years. Right? You've seen it. I see those things all the time. What they never, ever show to us is hundreds of people, thousands of people, hundreds of thousands of people, they go in and lose everything they own, every single penny that they have leveraged and lost all of their money, okay? Everything they had, and they're not doing it. Why? Well, because if they show the mass wipeout on the mass media, then nobody's going to go in and jump into this junk stuff and go into it, and they have to peddle the product because that's the business model. Whatever is good for Wall Street basically feeds those companies, because remember, most of them are public companies as well, so of course they need and have to peddle that stuff. But here, think two things to that you will learn nowhere else, as he likes to say, although I talk about it all the time. Markets are rigged, and there's no regulation or regulators that protect investors. Washington and Wall Street partner in fraud to exploit inexperienced and experienced traders. Now, how are markets rigged? Here is his story. 10 years ago, we had a flash crash. No sellers in the volatility future markets, so I sold volatility futures at 75% and made a fortune because markets came back within hours. Unfortunately, the exchange broke those trades the next day and stole my profits because local traders got skinned and convinced regulators to call back these trades. In 1978, Hillary Clinton invested $4,000 in 10 hog futures contracts and made $100,000. My point: VIX, which is volatility index, which has been delisted anyways, and hog futures are only for professional investors. Just two examples of rigging through non-existent regulation that the government claims there is here to help investors, but they help big banks and institutions, not individuals. During the 2000 credit crisis, trillions of taxpayers funded bailout went to financial institutions that committed crimes and actually started the whole collapse piece, and no one was prosecuted. Now, I disagree here briefly because there was one person that was prosecuted, and that was the person that actually was the whistleblower. So the whistleblower who went out and said, there's a giant problem, people are taking advantage of people, and this is what's happening, that's actually the only person who ended up being prosecuted and spent time serving. Everybody else was let go scot free. And that is the crazy and scary part. U.S. Federal Reserve and other central banks have printed over $100 trillion that has distorted market price and mechanism and inflated the most grotesque asset bubbles in history while widening the wealth inequality gap to levels never seen before. They're using the money for stock backs, which was illegal 30 years ago, and it probably should be illegal still, but it's not. We have around 30% participation by retail in the stock market, and they are the ones who always buy at the top and lose a fortune. The price action of markets has become irrational, and irrational action in overvalued markets always ends badly. And so there you go. You're hearing it from somebody else. I'm just using here because I always talk about this stuff, and I always talk about how stock market is rigged, how the markets are rigged, how I don't want to participate and I don't participate in it because it is rigged, and I don't like to play in the rigged casino where casino wins every single time and it's all backed on our losses. The second reason I don't like the casino, a Wall Street casino as I like to call it, is because it's a zero sum game. In order for me to win, you have to lose. In order for you to win, I have to lose. I don't like those odds, and I don't like the odds that in order for the company to win, we as investors have to lose big time because they all push us into the market. That's what everybody talks about. And I know you're thinking like, well, Nev, you were just talking about it now as well. Well, I talk about it and cover it briefly because I know people look at that stuff and I think it's important. And I like to contrast and compare it with other ways that you can go in and make money. And of course, there are many ways that you can go in and invest that is completely outside of the stock market. Cryptocurrencies are one of those things. And yes, I'm very bullish and I'm not shy about talking about the fact that I do believe in cryptocurrencies. And the reason I like it, and especially the centralized component of it, is because it's transparent. You can see it. You can't manipulate it. Okay. And it's not, it's pure market. It's pure market what's going on and happening there. You can't manipulate it the way that the companies can manipulate the stock market because you don't see under the hood. Okay. I like real estate because it's real and I can see it and I own it and I control it. Okay. I like businesses. I like owning businesses and investing in small private businesses where I get a lot of say and a lot of control behind it. Okay. Because I can see what's going on. And if there's any manipulation happening, I am the one manipulating it in my own favor. I like gold because it's real, and in times of uncertainty, just like today, you can go in and actually protect yourself. And there's a reason why these investors who are in big companies, in big firms, central banks, fund managers, VC managers, all of that stuff, why all of them are looking at that stuff. And I know that there's some of the components when it comes to real estate that could potentially be risky. I talk about it. I don't go in and sell you on real estate and say, hey, go buy it because that is the panacea, that is the unicorn. Nothing ever goes wrong there, right? Because people go in and try to tell you that stuff so that you get pumped about this whole thing so that you buy their products. And, once they make a sale, they could care less whether you make or lose money. That is not my goal here. My goal here with Money Matters, my goal here with One Deal Away is to provide you solid education. That's it. So that you can decide for yourself where does it make sense to invest so that you can start thinking for yourself, does it make sense for me to buy gold and what kind? And should I store it and where should I store it? Should it be physical or should it be paper? Does it make sense for me to go into real estate? Should it be long term or short term? Should I rent it or flip it? Should it be multifamily or retail or a single family home? Does it need to be in the United States? And if it's in the United States, where does it need to be located? All of those components, I want you to make your own decisions because you know your financial picture better than anybody else. Okay. And so many people rely on somebody else to tell them what to do without learning. And there's two reasons for that, I believe. One of it is pure laziness because people don't want to go out there and learn. And second reason, even bigger reason, I think, for vast majority of people is that they will do that stuff because they want to have somebody to blame when things go wrong. Sovereign individuals that will take on their own reins, their own control of stuff, they never blame anybody but themselves, regardless of what happens. Years ago, I watched a particular individual that is still on TV, that is still on a very large public network, and I might have mentioned it today already. I'm not going to say it, because I'm protecting the innocent right now. Um, that has was peddling certain things, and I didn't know any better in 2006 and 7 and 8 as well. And I was going in and buying what was being peddled to me, and I lost everything. Now, at first, I did blame this individual, but then I decided, it's time to grow up, Nev. And the grown up Nev realized it wasn't this person's fault, it was my fault. My fault for not learning, my fault for not educating, my fault for not using what I have been given, and my fault for listening to somebody without questioning it at all. My goal for you is that you will question everything and everyone, including me, whether it's here on the free sessions like this on moneymatters.com, or if it's in the classes that I offer in One Deal Away, including the Academy. I want you to question stuff. I want you to learn to be able to go in, but then question everything and wonder, does this still make sense? Because it might have made sense for me 10 years ago, 5 years ago, or today, but it doesn't make sense for you 2 years from now, 10 years from now. And whatever I'm bullish for today might change 6 months from now. I don't know that. Okay. But you need to understand that stuff. And so I get very, very passionate, as you can see, about the whole component about people learning. So that is what is today's show. I'm going to stop preaching, stop ranting. Hopefully you have enjoyed it. If you do like the show, do me a favor, hit that like button right now. Do me a favor, hit the subscribe and the bell button so you get notified every time the show goes live and shows up, which is every single day. Now, but I do want to point something out. Before we go away. This weekend, I'm going to go away. So Nev needs to step away from the insanity of what's happening in the world and the business and everything else. And I want to utilize the beautiful weather and the summer to go and camp. So we are not going to go live for Thursday, Friday, Saturday, and Sunday. So next 4 days, we're not going live, but I will prepare videos that are going to pop up live for you so that you don't miss anything. So I'm going to work extra hard today to prepare basically 4 days worth of content for you. That alone should earn me a like for this video. If nothing else earned me a like, that alone should earn me a like. Now we're going to end this stream and we're going to go and chat and hang out for everybody watching this live. Thank you for watching. Until next time, stay forever money blessed. And do remember, you are only one deal away.